Hello, my name is Gary Aldridge. I'm an author of Leveraging You, which is an online course that I've developed to teach business owners how to maximize the value of their business. Um, Today, our guest is Jessica Ginsberg. Jessica works with LFM Capital, private equity group located here in Nashville. And we just want to have a casual conversation and pick your brain about what you see in the business world that will help business owners increase their value. So thank you so much, Jessica, for joining us.
Sure, absolutely. Thanks for having me.
Well, just tell us a little bit about yourself and LFM Capital and how you got with them and what you do with them and all.
Sure, absolutely. So I grew up in St. Louis. Was there until college. Went to DC and went to Georgetown. There, got an undergrad degree in finance and accounting, and then started my career in banking, and then jumped over to the private equity side. I have experience working with a couple different private equity firms, though my role has shifted around quite a bit, especially since joining LFM. In the early days of my career, I worked on, what I think of as, the deal execution side. So I was really digging into the weeds and, understanding the numbers and financial modeling and all of that stuff. At LFM, I'm more on the front end of things, what we call business development. So building relationships with people like Gary, with business owners, with investment bankers all over the country, so that we are front of mind when when business owners are ready to sell. So LFM is a private equity firm based here in Nashville. We were founded in late 2014. We're a little different than a lot of private equity firms out there. Most private equity firms are founded by finance guys, people who kind of grew up, whether it's banking or sort of another part of the sort of finance industry, and they're really good with spreadsheets and really good with numbers, and figure out how to do good deals. We're a little different in that we were founded by operators. So we were founded by guys who are engineers by education, and then spent years and years in leadership roles at companies like Dell and Caterpillar and Ditch Witch. And so they really understand, what a manufacturing facility, should look like and feel like. As a result, manufacturing is all we do. We play in, what we call the lower middle market. And so that means, companies that are typically about 10 million of revenue and above. So that's really where we're focused, because we believe that so much of the country's backbone is the backbone of the country's economy is really sort of riding on these smaller manufacturing companies. So we look for businesses that are growing, that we can help grow faster, companies that we can help take to the next level based on who we know, what we know, and where we've been.
So I heard you say that you focus solely on manufacturing. Is there a particular geography in the country, 10 million plus in revenue? What about profitability?
Sure. So the first part of your question was about geography. We look at deals all over the U.S. and Canada. I think given the manufacturing focus, a lot of what we do tends to be kind of Midwest, upper Midwest. We own companies all over, Northeast, Southeast, West Coast, but I would say, the bulk of the volume of what I see is in the Midwest or upper Midwest. From a profitability perspective, when we are looking for, what I'll call new platform investments, we typically start with cash flow right around 3 million. I would say there's some variability there. We think about the EBITDA metric a lot. Some owners are very familiar with that. Some owners are not, but it's how, people in our business typically think about cash flow. And then another place where we're very active is what we call add-on acquisitions. So we own a company, and then we are helping that company grow through acquisition. So if we're looking at an add-on company, that can be significantly smaller, as small as, about 1 million of EBITDA is typically where we'll start.
Right. You spoke about this, about your role in business development and how you network around the country with different people. So how do you find your prospects for businesses that you vet?
Sure. So we think about things in sort of two different buckets. One is, what we call indirect sourcing, and the other is direct sourcing. Indirect sourcing means that it is a deal we are seeing through an intermediary. That could be an investment banker, that could be a broker, that could be an attorney, that makes an introduction on a company's behalf. The other way, what we call direct, is, we are literally knocking on doors, or making phone calls, sending emails. We're trying to find interesting businesses and going direct. I like to compare it to selling your house. You're either going to hire a realtor or you're going to, go for sale by owner. And, we are trying to hit both. So we're calling the realtors, but we're also knocking on doors.
I know when you have your own process of due diligence, you found a prospect, and maybe at some point you're handing it off to another part of your team to actually do the vetting. I'm a simple guy. I think of things in simple terms. I think green flags are good and red flags are bad. So what are some green flag types of things that you would call green flags that say, hey, okay, we've got this prospect, looks possible. Let's dig deeper. We like this. We want to keep going.
Yeah, no, absolutely. So, a couple of things, just sort of high level. Everyone's gonna wanna dig into the numbers, right? And so at a very high level, what do those financial trends look like? Is revenue growing? Is cash flow, growing to stable? What is margin? What do margins look like? The next thing that I will think about is, what industries does the business serve? Are they industries with tailwinds that are growing? For example, automation or e-commerce or material handling, or are they in, end markets that might be cyclical, right? Or might be in a downturn. So you think about going into a potential recession here, new home building, right? So we try to think about, what are the external factors that are going to help or hurt this business. The other thing that's big for us is growth levers. How can we grow this company? We like to find companies where, there are 5 ways to grow it. We could expand the footprint. We could grow the distribution channel. We could do add-on acquisitions. And then the last thing that is, possibly the most important thing is, do we think we're going to see eye to eye with the owner, and the seller? For us, that cultural fit and cultural connection is huge. Can we build that foundation of a trusting relationship? Which, some people might say, oh, what does that matter? I'm selling the business. I'm out of here. But, we find that there's just so much that, an owner's, we're buying a business and it's really the owner's legacy, right? That is sort of left there, and it's got to be strong, and we all have to feel good about what we're investing in.
When you decide to buy, you normally buy 100% of it, or do you buy a majority of it but keep the owner there to help with the transition? Or I guess deals are, it all depends, but what would a typical deal look like?
Yeah, so it all depends. I think, we do look for majority, so that's, sort of a constant. We are more flexible than most in terms of, the management team and sort of the owner, right? In many cases, the owner is running the business. And so, look, we love it when an owner wants to stick around and, wants to keep doing it. But, there are certainly many cases where the owner says, hey, I'm ready to go to the beach. I'm done. And honestly, both scenarios are fine. We just want we want the owner to be as honest and open as possible so that we can decide how to best move forward. We have great operating networks, just given that our guys come from sort of the field, so to speak. We know people everywhere, and we know people in so many different end markets that we're really good at finding senior level leaders We just have to know when to kind of turn on that machine. So, we really do like for our go-forward management teams to have equity ownership. We think it just really gets us aligned and, kind of get everyone, in the right seats of the bus, and then make sure we're pushing in the right direction. And so sometimes that means that, an owner wants to sell the vast majority of the business, but we can, figure out how to allow that go-forward management team to invest alongside of us in some way. It could be 5%, it could be 25%. It just depends.
I hear business owners, I know you do too, talk about different challenges that they face. I hear these are some common ones. I can't find talent, can't find people, can't find management, can't find that. What are some of the challenges but unique to manufacturing that you hear that might either be that or be something different?
Yeah, I mean, it's honestly a lot of what you just said. I mean, so recently, I would say, material cost has been a huge issue just with the changes in steel prices that we've seen over the last, 12 to 18 months. So I think that's been a major challenge, just ability to get ahead of that and then price product appropriately so that, your margins don't come in, a lot lower than you anticipated. So I think that's a big one. And then I think keeping people is just, it's huge. I mean, we really noticed a change, kind of through COVID, coming back from COVID, finding good people and then keeping good people. I mean, in our factories, we would find, a new person would start and then 2 weeks later they'd go down the street because of, 75 cents more an hour or something like that. And so, we tried to be as creative as we could with our portfolio companies to build out, retention programs. You stay for a month, you get a raise. You stay for 3 months, you get another, whatever it is. Because, the longer someone is there, obviously, the more value that they can add. So those are really the top priorities for us.
I'm thinking of a client now who, and I got you all sent out an email this morning, which I got, which I forwarded to a client, and I said, you see these numbers? These are our targets now. And it may be something you'll be interested in, not today, but maybe within a few years, because we've got some pretty good growth plans and taking some steps. Yeah. Love watching what he does for his labor. And he was telling me how, he'll, like a lot of people, spend money going online, interviewing, and those people are harder to get and to keep versus taking care of the people that he has on board. And those people tell their friends and neighbors. So those people walk in off the street looking for work that he hasn't had to spend money, and they end up being the best workers. And they're coming because of word of mouth. So his own employees are his best source of recruiting.
Yeah, no, I think that's exactly right, and it's kind of like what it's funny. My father-in-law always tells my young kids, if you are, be good, and good things will happen to you. Right? Take care of your people, and more people will come. So I agree. I think that's a great strategy.
It is even, and everybody talks about being customer focused, but even more importantly is being employee focused. I think that helps you recruit. What if you were a business owner today? Now you talked with them. What are some of the top 2 or 3 things you would recommend to them that they need to be doing now? Because I tell people frequently it takes a while to move the needle. It doesn't happen overnight, and so what are those things that they need to be working on today to help them harvest that down the road?
Yeah, I mean, so a couple of things. I mean, number one for me, and I think it's amazing to me, this seems like such a, easy thing, but I think so many business owners just don't, because they're so busy kind of doing their day job, is really take a step back and think about goals, right? Like what, you think you want to sell your business in 1, 2, 3, 5 years. What are you looking to do, right? Like, is it maximize value? Is that your top priority? Okay, run with that. Is it leaving a lasting legacy and really taking care of your, employees? Is that what is most important? You got to do that soul searching so that you know what you're, what you're looking for, and then beyond all that, so you're selling the business, but then what? What do you want to do going forward? Is it a, I want to sell and hit the beach, or is it a, I want to sell, but hey, I want to keep running this thing, or I'd like to stay involved and I want to do ABC, but I don't want to do XYZ. So I think really wrapping your head around what you want the next step to look like is huge. The next piece is, and again, I think this seems simple, but it really tends to get lost in the day to day, is having all your, sort of ducks in a row from a data perspective. Potential buyers ask a lot of questions. We love data. Not just who are your top customers, but who have your top customers been for the last 5 to 10 to 15 years? Getting all of that stuff together can be exhausting. Going through an exit or a sale is exhausting. The more prepared you can be, the better. So that's those are kind of my two biggies, and that's even before you really kind of get in the door of, internally what you should be doing, with your business.
Right. I love both of those, and the first one that you mentioned, to me it sounds like really defining what is your why, and I can give you a couple stories. One, a father of a friend of mine some years ago, and he started a business. He was telling me all about it, and he said, well, I sold my first business, and he was a hunter and a fisherman. He said, I hunted everywhere I wanted to hunt, I fished everywhere I wanted to fish, and I woke up one day and I was bored. I didn't have anything to do. And
right.
So then he started another business. So I think it's the Exit Planning Institute that says 70% of business owners express profound regret within 12 months of having sold their business. And that's because they did not do the very things that you said to do. And that is to, figure out what your why is and what your goals are and what your legacy is. It's more, and I try to tell people, it's more than just money. Okay, money's fun. Everybody wants money. Everybody wants to go to the beach or go hunt, golf, fish, whatever. That's nothing wrong with that. But what's your meaning and purpose? Why do you wake up in the morning? What's going to keep you going after you sold this and you've invested whatever 10, 20, 30 years in the business, and now that purpose is gone? What's your purpose?
Yep. Absolutely. And I think more often than not, all those extra zeros in the bank account don't do it the way that the seller maybe thought they would, right?
Yeah, and I love the other part about data. I remember some years ago going through I was on the sales side at that point and putting together that war room of data, and it was exhaustive, but we had it.
Yeah.
We had it.
Yeah.
We could get our hands on it, but it's a lot. There's a lot more involved than maybe some people realized. So being able to have your finger on the pulse of your business more than you think you do,
Yep. And it's amazing, the number of business owners we talk to, and we say, well, gosh, it was last year was a great year. What changed or what happened? And it's like, I don't really know.
I face this now as this this chapter of life, and I've heard people say this 20, 30 years ago, the older you get, the faster time moves, and it does. I mean, here we are in March already of 23, and
Yep.
whatever goals you set for 23, I mean, people got to stop and, all that's probably changed, stuff happened,
Yep.
It either did or didn't happen, things change, your employees changed, your supply side changed, everything, interest rates changed, that's amazing. I'm trying to think here. Oh, this is good. Give me an example of some things that you looked at for a business and then you decided to walk away. Like we talked about green flags. What about some red flags?
Sure. So yeah, I mean, I think the biggest things for us, low margins. We think about gross margins and we think about EBITDA margins. If I see gross margins that are much below 20% or EBITDA margins that are much below 10%, there could be opportunity there, but I think, my usual quick takeaway is it's a commodity product. There's no sort of special sauce. There's not a moat. The guy next door could start doing it just as well as I'm doing it, right? So that's a big one. Customer concentration is a big one. If the business has one customer that's greater than, call it 25% of sales, That's a tough one. I mean, it's most of these things for us aren't hard lines. I mean, we'll dig into situations that have things like this, but it's going to raise a question. Cyclical end markets. And then I think the other one, and this is hard to measure, but it's really important to us, is just, kind of that culture component. We have absolutely kind of gone down the road with companies where something just didn't feel right. It just didn't feel like there was alignment, there wasn't trust, there was high skepticism from the seller. And sometimes you just, you got to say, hey, we're walking away. This isn't for us.
Was working with it's a smaller business, much smaller than what you would consider. My client was looking to buy, and so we were getting information, literally handwritten notes on paper. And I said, I just I need to see the tax returns. And they pushed back and said, well, why do you need that? So because we need to know what we're buying. And it said,
Right.
and this was a very short meeting, and they said, well, we're not going to do that. And I said, and then I just said, thank you for your time.
Yep.
Have
Yep.
a good day. I mean, the meeting did not last 10 minutes. That was it.
Right.
So that just tells me, they didn't want to disclose something. They wanted to hide something. I don't want to spend any
Yes.
time on it.
Right.
So, owners, I think, need to know that when from the sell side, when a prospective buyer comes along, they're going to want to know everything,
Yes.
and if if you don't want to give it to them, then you're not going to sell it to them,
Right.
um,
No, that's exactly right. And I think, like most things in life, you get what you give, right? And so there has to be this mutual, sharing of information. Typically for us, it starts with, we'll sign an NDA, we'll agree that, everything's confidential. And then there is, an owner will, send us some information, or it'll come through an intermediary. But then the converse of that is we love having owners come to our office. Come in, take a look. We'll show you everything. We've got nothing to hide. For us, I think, or here are the phone numbers of 5 companies that have sold to us. Go talk to those guys.
wow.
We do that all the time because it's it's part of building trust, and it's so important.
Right. Any final thoughts or comments or questions that you can offer for business owners that would be helpful for them?
Ooh, that's a good one. I think just really, really thinking through goals like we talked about. I think, getting a feel for who's out there is really important. There are so many different flavors of, whether it's a private equity buyer, whether it's a strategic, company coming in to acquire your business. I think just getting as smart as you can. Some private equity firms will buy any kind of company in any industry. They're just looking for a way to, maximize returns. Some firms, more like us, are really focused on an industry. Some firms are really focused on bringing in an operator to, make a lot of changes, right? For some people that's a fit, for some it's not. So I think just really kind of understanding, in the same way that, you want to know your customers, understand the universe of potential buyers out there. I think that just helps, it helps to be more targeted and candidly not to waste a whole lot of time. You could spend years interviewing potential buyers, and I think if you can narrow the field based on goals and based on, fit, I think it'll really serve business owners well.
Um, there are a lot of things, talking to business owners now that are listening to this, a lot of things you can take from this podcast with Jessica. Here's some things that I think stand out. One is your profitability, your margin. Okay, and just think and what I try to tell business owners on the front end is look at your business through the eyes of a buyer. It's just like if you're looking at a house through the eyes of a buyer, it's going to look different than if you look at it through the eyes of a seller. Okay, so look at your profitability and what it is, and how you can maximize that. What are the industries that you serve on the customer side? What's the scalability of your business? Okay, and Jessica mentioned 5 ways to do that. Whether it's with organic growth of the existing company, expansion in the more geographic areas, add-ons. What are some ways that you can scale your business, right? And then it's the culture. It's the I call the integrity, the character of your business, of yourself, and working with the buyer, because that's important. Whether you're going to stay with them on some basis or not, it's still going to be critical through the thought process. If you have any questions, please look at the website lfmcapital.com. And also for Jessica herself is Jessica at lfmcapital.com. If you have any, if you want to learn more about Leveraging You, that website is LeveragingYOU.com, and that'll teach business owners how to maximize the value of their business. A lot of stuff Jessica talked to today, although they focus on manufacturing, it's applicable to your business. Okay, some things are certainly unique to manufacturing, but then a lot of those things are points that can be applied anywhere, any industry, any location, any size. Okay. Thanks so much, Jessica. I appreciate your time. I know you've got a hard stop, so I got to let you go, but thank you so much for joining us. I appreciate your time.
Thank you, Gary. This was great. I appreciate it.
Thank you.